do want to keep in mind there are bank rules. And so if you're running maybe a funding sequence, or if you're wondering, okay, which banks should I watch out for? The Bank of America has something called a 2-3-4 rule. They allow you to get 2 new cards every 2 months, 3 new cards every 12 months, and 4 new cards every 24 months. But they also have something called the 7-12 rule and the 3-12 rule. The 7-card rule, or the 7-12 rule, means that you're allowed to open up 7 new accounts as long as you are a customer. Again, relationships, a customer of Bank of America. If not, it shuts you down at 3. Next one is Chase. Chase is a really good place to build out relationships. They may not necessarily be the best when you're starting out to go in for a business line of credit, because you do have to be at least a year old in their ecosystem, but you can get immediate access to some of their 0% Business Inc. To their 0% Business Inc. card. This means that you cannot have more than 5 new accounts in the last 24 months. There are some exceptions to this, right? Exception number 1 is that if you maybe are an authorized user on some of those accounts, or if maybe those accounts are mortgages, auto loans, or personal loans, then the 524 rule doesn't count toward you. But here's like the sidestep that I wanted to introduce to you guys. We've noticed that if you're going for business Chase cards, the 524 rule isn't necessarily as effective moving into Capital One. They allow 2 Capital One cards every 6 months. Now, I will ask you to be careful with Capital One, because the Capital One Spark card does report to both personal and business. So remember what we mentioned earlier. When you're getting approved for business lines of credit and business cards, that doesn't reflect over on your personal side. With the Spark card, it does. With the Discover Business card, it does. So whatever you have on one side, kind of like math in 5th grade, right? They carry it over on the other side, whether you are late or not. So I am going to rate this, if I'm honest with you guys, I'm going to rate the Capital One Spark card on the lower side. I wouldn't really waste too much time with them. Same thing with the Discover Business card. Barclays Bank has their 1 card every day rule that allows you to open up multiple new Barclays cards every 24 hours with the same hard inquiry. They're a little bit tougher because they're inquiry sensitive. And so if you guys are going to put them like at the top of maybe the funding sequence for yourself, you may want to put them a little bit at the top, because they're really sensitive to inquiries, kind of like Chase. Chase is also a little bit more sensitive. Bank of America is a little bit more sensitive. They're really monitoring your spending limits. So even if they're not going to be pulling your personal credit as much, they're at least going to kind of check to see how your spending limits are, and then also they're checking your current accounts that are open. They're also wanting to see that you're not fishing too much for new accounts. American Express, which is where a lot of people want to get into, and rightfully so, right? Especially since American Express is now teamed up with Cabbage, which you can, I think, get up to, I think it's either $150,000 or $200,000 in a business line of credit with Cabbage, which is a fintech company, but American Express bought them out. And so if you are already in the American Express ecosystem, you can bypass a hard credit check and get yourself a business line of credit. Obviously, if your data points are on point, because you being in that American Express ecosystem, you're essentially able to tier your way up through their cards, both on the personal side and on the business side, without having to use any more hard inquiries. Almost wrapping up, and we're closing out with this, which is really important. Top national banks, grade A banks that you guys should consider. I have American Express, Bank of America, Chase, Citibank, US Bank, and Wells Fargo. These are all of our grade A national banks. I wouldn't mess too much with Citibank on the business side. If you maybe are someone that doesn't carry too much interest, or really doesn't carry a balance rather, so you're not really paying an interest. But if maybe you're looking more for 0% funding, like we talked about earlier with unsecured business lines and credit cards, maybe Citi isn't necessarily the best for you, because they don't have any 0% products on their side. And I know that I'm going to get a lot of heat for, bro, why do you have Wells Fargo on here? You're killing us. Or like, you're doing so well up to this point right here. And remember what we just talked about with comparable credit, which means banks, credit unions, and lenders are going to look at what's already on your profile. Okay, what does he or she already have on the profile that we can compete with or compete against, so that we can bring them into our ecosystem? And so the hedge and the strategy with Wells Fargo is that Wells Fargo has a really low barrier of entry for you to get a secured business loan, right? You can do it through your CD. I wouldn't do anything less than 5K, right? So if you're gonna do it, you wanna do it right, because according to what you put there is what's going to attract the type of funding that you want. It's kind of like attracting a bad client. Like sometimes it's better to say no to a bad client, because bad clients know bad clients. And so you're just gonna fill your ecosystem up with clients that are just headaches. And so I want you guys to think of it the same way with Wells Fargo, right? And so 5, 10, if you guys have more, 15, $20,000, whatever it is, treat it the same way that you would the pledge loan play, right? With Navy Federal. Pay 90% of the balance off. As soon as that balance comes in, the key to this is that when it reports over to your Equifax, to your Experian, to your Dun & Bradstreet, wherever it reports, it's not going to report like it's a secured card or a secured loan. It's just going to report that it is a business loan, which is really cool. Moving into credit unions and regional banks. If you're taking screenshots, I call this kind of like the holy grail, especially if you're starting out, if you're wondering where you should kind of invest your relationships into. I have KeyBank, I have PNC Bank. Obviously, my clients are absolutely killing it with them. I added Fulton on there. Now, keep in mind, you may have to look at your region. Some of these banks may not be in your region. I have Fulton. I believe Fulton is up in Jersey. Penn Fed is, for the most part, I think, all across the East Coast. Navy Fed, you guys already know. House of High Limits, one of the biggest, or if not the biggest credit union in the country, which is now Truist. Now, with these credit unions right here, I don't want you to just stay stuck, even though this is like a gold mine with these guys right here. I don't just want you guys to stay stuck with necessarily these type of credit unions or these type of banks, as much as I want you guys to use this as a framework of, okay, who in my area, which in my program we call unicorn credit unions, who in my area is a unicorn credit union that, and let's define that. Unicorn, let me put some context around that for you guys. Unicorn credit union means that there's no more than 3. If there's more than 3 credit unions of that same, that it's not a unicorn, right? It has to be something specific to maybe your area, maybe your region. The reason for that is because you're not going to be competing with the whales. You're not going to be competing with the big hedge funds. You're not going to be competing with the bigger business owners. You're only going to be competing with the smaller pool of lending that's done in your specific area, your zip code, your demographic, which means they're more likely to want to lend you money and do business with you because you are their customer versus a bigger bank. And so as you guys are going through their website, as you guys are going through some of the products, just think to yourselves, okay, Irv said, take a look at maybe some credit unions that are maybe less than 3 in my area that are unicorn. And so one of the fastest ways that you guys can do that, I'm sure when you're driving around and you're commuting, you look and you're like, who the heck is, I've never heard of that bank in my life. Who the heck is that credit union? And here's the game changer. A lot of these banks and credit unions don't even bother to update their websites. Their websites are usually, they look like they were built in the 90s, right? The reason for that is because they focus on relationships, meaning they want you to walk in. You want to walk in, you want to grab the brochure, you want to shake the hand of the relationship manager, you want to know who the banker is. So that way, when you're ready to pull the trigger, you're maximizing the funding that you get. Now, I'm going to give you guys a bonus funding